Okay. Good afternoon, everybody. Welcome. I'm Chris Lankenau with Urban Department. With me, Kwon. We are both principals with the firm. We've been working with the county since December now, I think, on a housing study. We're happy to be here. So basically, in the last, I'll show you in a second. We've been working since then up to this point on the county interim report. And we're going to report all of our findings to date with you. We'll get your feedback, and then we'll get into more of the housing needs in the second part of the project. But if you don't mind, I'd love to just hear who everyone is in the room. I know some of you, but if we could just go around real quick, just to get everybody's name and affiliation.
I'm Bill Jamari, I'm the planning director of Genesee County. I'm Jimmy Dillman, I'm the senior planner with Genesee County.
Tony Mancuso, Mancuso Commercial Realty.
And Michael, I'm the TV Town Board and the chairman of the Genesee Housing Committee.
Lorraine Payton, Chairman of the Genesee County Planning Board.
Carrie Herman, Genesee County Social Services. Eric Manager, Deputy County Manager.
Justin Monkey with Pastel. Kim Krensick with the Genesee County Economic Development Center.
I'm Kristen, the Genesee County Housing Specialist in
Ray Frank and Huntington.
Pamela LaRue, Compliance Officer, Genesee County. Sarah Smith, bylaw marketing intern at Grant. And Heather O'Leary, I'm the HR Manager at Grant.
Great. Good to see you all. I know I met some of you on Zoom, some of our interviews and some of the other meetings. So thanks for being here and welcome everybody on Zoom too. Okay, let's get started here. Let's start with the project schedule. Let's see everybody an idea. Where have we been? Where have we gone? So as I mentioned, we started in December. We're about in the green part right now, toward the green red border. So the last several months we've been doing a lot of public engagements. We've been reaching out and doing a lot of one-on-one stakeholder interviews with people to get your feedback on your take on housing and housing issues in the county. We conducted a survey, which I think a lot of you probably filled out, and we will go through some of those findings today to show you what people have said. And then phase 3, the housing market analysis interim report. So that's really where we are now. We issued a draft report of all our findings, and today's presentation is a summary of that. So it's a lot of information, but we hope to touch on some of the highlights. Of course, if you have questions, we'll address those, and the report itself may address some of the questions you may have that the presentation does. But then from here on, the rest of the summer, we'll get into what we're calling a housing needs assessment. So based on growth projections, employment projections, we will come up with what we think is a likely housing quantity over the next 25, 30 years to 2040. And that will indicate, or that will inform, I think, what our ultimate recommendations are based on their needs. So that'll be in the next couple months, and then we will come back. And at this point, probably September or something like that, and we'll kind of do a final rollout. We'll go through the results of the needs assessment. We'll put together kind of a presentation, kind of summarizing everything to launch project in your hands, and that'll kind of, I guess, wrap up our role in the project. So that'll be end of summer. All right. So interim report. Basically, the topics we cover are demographic trends, just to kind of set the baseline. A lot of that comes from the census. Employment trends, housing and employment are very interrelated, as most of you probably know. We get into the housing cost burden and affordability issue, which is common pretty much everywhere we work. The housing supply analysis gets into what's there on the ground throughout the county. We break it into sub-markets, as you'll see, and then we get into the for sale market and the rental market to give you a sense of how those trends have been coming together over the last few years. So starting with demographic trends, again, this is kind of a high level analysis, to give you a snapshot. So that's 2022 is the most recent year that the census has provided. population information, but what we did was we broke the county into 4 submarkets. So taking the city of Batavia, where really the most of the activities taking place. It's the center of the county for commercial, most of the housing activities taking place. It's not that conservative submarket. Oh. Right, the top part. Yeah.
Suppose.
Okay, so the blue is the town. That's really, again, it's thought of that as a separate submarket than the more rural towns in the east and west. It's more of a suburban activity just outside Batavia. And you can see based on population, that's pretty good chunk, 11%. And then see the east and west. So the green, more maybe oriented a little bit more toward the Rochester market, the red a little more to the Buffalo market, but still very Genesee County. And this gives you just a sense of the breakdown of population. So snapshot, the west has the highest population, 36% of the county. How have things changed? So compared the county to the Rochester Metro, Buffalo Metro, is then the submarket. So you can see those metros have grown a little bit. Genesee County's declined a little bit in population. You can see the shining star is the city. The city has grown by 0.2% in the last 10 years. The town has actually gone down by 7%, whereas the east and west markets have declined not as much. But that all kind of substantiates the overall county decline of the 3% population, but again, the city has shown some promising growth. Okay. And this house, yeah, these are households.
In chat, I'm wondering if that. Or it's chat.
Right.
Then close that.
Okay.
Yeah.
I don't know what happened along that. These are households compared to population. So you can see again in Batavia, the households in the last 10 years have grown by 14%. And the remainder of the county has actually declined and in the submarkets away. But that brought the overall county percentage up to 1.9% growth. So you can see Batavia is really where some of the growth is occurring right now. Okay. Drilling in a little more in terms of population, these are the jurisdictions, municipalities that have actually grown in the county, despite some of the losses on those prior slides. These places have all grown in the last 10 years. Oakfield wins the prize with 19% growth, so it's 237 residents in the last, 2012 to 2022. And again, you can see how that breakdown occurs. So some of the villages have gotten a few more folks, the city as well, but mostly it's in the towns. We looked at migration too. Who's moving to and from Genesee County, just to get a sense of how that movement's occurring. So Monroe and Erie, not surprisingly, are your 2 biggest recipients and origins of population. So yeah, as the numbers show there, kind of 20% is the magic number, more or less. People are about 20% of them, 21.6 to Erie in 2021, and to Monroe, and then leaving from the county to those places, again, 16 to 20%, but again, Monroe and Erie are the 2 destinations. So it makes sense, really. I think probably has a lot to do with deployment. We'll show you some of those statistics in a minute, but it could be that people, once they worked and lived, they decided to kind of make that adjustment closer to where they were. Looking at income, this is 2022. Not too different. The county is at about 68,000 median household income per year. compared to Buffalo and Rochester metros, right in between. So it's a little higher than Buffalo, not quite as high as Rochester metro. Okay, let's get into cost burden and affordability real quick. So a lot of you in the housing world probably keep hearing about cost burdening and all that kind of thing. I guess casual definition is when it's no more than 30% of your income is spent on housing. I'm sorry, when more than 30% of your income is spent on housing. That you're considered cost burden. So keeping that in mind, we'll get into some numbers here, but a lot of people are spending a lot more than that. That's always been the number, but we're finding more and more people are spending 40, 50% of their incomes on housing. So it's really becoming an issue. So in Genesee County, more than 5,400 are considered cost burden household. It's 22%. You can see the breakdown between homeowners and renters. So owners tend to be less cost burden than renters. They tend to be wealthier. We'll show you some of those numbers too. But so approaching 40% of the renters in Genesee County are considered cost burden. When you look at how that compares to Erie and Monroe counties, it's actually not quite as high in terms of renters, but it's right in the middle of owners between Erie and Monroe. So again, takeaway there is renters tend to be more housing cost burden. Drilling in a little more, we get into the AMI, the area median income numbers here. In 2020, when the last of that information was available, nearly half of all households and less than 80% of the AMI cost burden. So when you look at the yellow figure there, that's all the households in Genesee County. The blue, that's almost 11,000 are earning 80% of the area median income, and we're using the 4-person household for that number. And then another 46.8% of those are earning less than 80%. So it basically demonstrates that the county is experiencing, a housing affordability issue, and you're not alone. We see this pretty much in every place we work. So it's a national trend. It's a local trend, and that's one of our major challenges here is how to overcome that. This is information from the United Way, ALICE, asset limited, income constrained, and employed. So these are households where people are working and earning income, but there's still cost burden and they're still struggling. So 24% of the households in Genesee County are earning less than what ALICE, the United Way, considers a survival budget line. So at that point, people are sacrificing what they're spending on other things, healthcare and transportation. So it's really a critical line of affordability that's impacting almost a quarter of the population. I was going to do this right, or are you going to do this? Okay, I'm going to hand it over to Isaac. You can go through some employment trends. We'll transition into the sales market, and then I'll take it back.
All right, thanks, Chris. So the employment, as Chris mentioned, there's a direct linkage between affordability, housing, and economic development and jobs. So we took a deep dive into the jobs and where your residents are working. So we took a look at the trend line in terms of jobs located in the county, and you've been kind of surfing the 22,000 and 23,000 jobs rate. So hasn't been too much fluctuation. Usually when we visit most communities, right at between 2009 to 21, there's usually a huge drop off during the recession. In Genesee County, however, it's been relatively stable. So actually that's a pretty good sign of your stability. At the bottom, we're just profiling some sectors that have either had tremendous increase, relative increase, or some declines. Manufacturing jobs, you added 361 manufacturing jobs, which is a great indicator. You also added a lot of jobs, 331 in healthcare and social assistance. That's the growing sector all over the country. So every community where we pull this information, healthcare is growing. Manufacturing, different story. So about education services, you lost 513 jobs. So we're trying to understand what that was. That could be possibly a school that may have closed or some kind of something that happened. I'm not sure exactly, but the data between 05 and 21, we lost about 500 jobs there, education services. This is a tree map of top 10 county industrial sectors. So it gives you a visual idea of what kind of, distribution of the top 10 sectors. So these top sectors represent about 18,000 jobs out of the 22,000 that would be. So it's the vast majority. As you can see, manufacturing is the biggest sector, 3,400 jobs, healthcare about 3,100. Education about 3,000, so retail trade about 25. So these four make up a little bit more than half of your jobs. So that gives you an idea, and then the others are kind of broken into smaller pieces, including accommodation, food services, public administration, wholesale, et cetera, et cetera. So some of these sectors are higher paying sectors, as you imagine. Manufacturing relatively high, education probably about the middle, retail trade, accommodations, they tend to be lower paying jobs. So these are folks that are working, but a lot of them are still struggling with housing costs in particular. So this gives you an idea of that. Where do your county residents work? So this is like not the jobs, but where you all are working, assuming that all of you are Genesee County residents. So 40% of you, 2 out of 5 live and work in the county. So that's actually a relatively high number from our experience looking at other counties. And then another 30, 40, I can't do the math, 40% do this migration daily in terms of commuting to your adjacent counties. So that's a good chunk, about 80% of your residents. You either stay here or you go to adjacent county for work. And then, other counties are kind of spread out all over. So that gives you an idea. How long is your commute? About 35%, less than 10 miles, which is great quality of life. You can just get in your car or even, ride your bike, that's probably doable. Another third, between 10 and 25, and then about 25% are driving 25 to 50, and then 10% are even going farther, 50 miles. So we drove the highway today, there's no traffic, so which is great. So 50 miles you can probably cover in, depending on how fast you drive, less than an hour. So gives you an idea of your commuting distances. This actually is an important indicator for us because one of the low-hanging fruits of any county that wants to grow, there are people that are already working here. So in terms of jobs, if you're already working here, you're working with manufacturing, sectors, part of the longest hanging fruit is to get those people that already work here and commute into the town to purchase a home here. So that's a good takeaway and going forward into the recommendations. Workers of your residents, how has it evolved in terms of commuting for your residents? So in 2005, 59% of you all lived and worked here. Advanced to 2021, less than half of you work here. So more of your employee residents are going out of the county for, and not only that, you drop about 2,600 people that are working and living. So again, your commuting distance probably has grown, and then the fact that it's not just distance, you are out commuting more so than ever before. All right, that gives you an idea of employment and jobs. Now we'll go into the housing supply. Now we're going to take a deeper dive into your housing stock and characteristics. We mentioned that the only growing area in terms of population and households is a housing unit, by the way, it's, kind of interchangeable, is Batavia. Now, it happens that Batavia city is also the lowest home ownership rate submarket. So you have the most renters in the city, makes sense. So about 53% of the city households are homeowners. Compared to the other submarkets, significantly higher, so 88% really high, east is 82, relatively high, 80% for west. So generally speaking, most of your the highest concentration of rentals are in the city of Batavia. That should come as no surprise to you. On the left is the owner occupied housing units, and what kind of characteristics, how many units in the structure. 89% are one unit structures, so no, condos, if you will, or, not too many twin, we call it twin in Philadelphia, but these are duplexes here, 2-unit ones. 2-unit to 4-unit, those are small slices. Mobile homes, 6% is a pretty considerable chunk, but then the vast majority, as shown in the blue, are 1-unit single family residences. The pie chart on the right are renter occupied. The 1-unit is found on the southwest sector, the 1-unit detached, and a few more in the 1-unit attached. 2 units, 3 to 4, if you combine those, that's probably about 75%-ish. So 3 out of 4 rental stock is in small dwellings. So we're not talking about larger apartment complexes by and large. Those are represented in others. 50 or more, et cetera, there's only 7%. The vast majority of your rental housing stock is in small single family structures. All right, so income restricted. Now there's the term affordable housing, and this is actually a more technical term. It's income restricted. Most of these are restricted to households making 50 to 60% of the area median income. These are rental housing, and they've been financed through using tax credits or HUD financing, et cetera. So you have a total of about 900, a little bit less in the entire county. 23 income restricted communities, and their profile, actually in the report, one by one, how many units, where they're located, et cetera. And 537 are in the city. And as a whole, the 874 represent about 13% of your entire rental housing stock. Okay, pulling that back out a little bit. If you look out, we just flew over and then look at housing and what is the distribution here, looking at the entire housing stock in terms of vacants as well. So 2,600 units, and you have 3% that are vacant. Other vacant, we'll get to that. Conventional vacant, the purple, that's 2%. 530 housing units, according to the census in 2022, were vacant. Nobody was living in them, though they could be lived in. Another 3%, the 784, are what the census calls other vacants. These are usually properties that are deteriorated to a point where it's not habitable. So some of them are used for storage, some of them are in legal trouble, et cetera, et cetera. So these are actually homes that are in distress, many of them. And I've heard the term zombie homes, some of them are that. So you get an idea about the scale of that issue. 3% of housing is other vacant. We also look at the seasonally vacant. A lot of these are rented, only lived in a part of the year. You have about 300 of those. What's the rest is about 18,000 owner occupied and about 6,500 renter occupied. So that gives you an idea of what's going on in your housing stock overall. All right. And that's the same graphic, kind of like by the submarkets. As you can see, the big takeaway here is the city of Batavia has 3,500 rental units. So by far the largest concentration. So Batavia town is relatively high in ownership rate, as you said before. There's only 300 rental, and the other 2 submarkets are relatively similar in characteristic. Changes in the housing supply. You added a net increase of 300 owner-occupied housing units. Seasonal went up, renter occupied went up, other vacants went up, conventional vacant went down. So that signals a constraint in housing supply. So there's not enough homes, so the ones that are kind of usually Chris will get to it, but about 5% ratio, 5% vacancy is a comfortable where people can move around, there's migration, but it's significantly less than that. So the homes are nowhere to be found, both for people who are trying to purchase a home as well as people who are trying to rent, because there's just nothing available. And now you can probably have many anecdotes of that effect. Okay, so what's been the production, the supply, and one of the indicators that we can use to kind of gauge that is the building permit issuance. So back from 2000 all the way through 2022, these are the number of single family units permitted. Now, before the Great Recession, you had a pretty good run of up to 116 units permitted in 2003, and then it started sliding, and the familiar characteristic of bottoming out post 2008 occurred, and you went down to as far as low as 19 units permitted in 2001, and that's where you've been sort of bobbing around there. So there hasn't been a robust number of housing production pretty much since pre-pandemic, pre-recession. So that's where you've been in terms of single family. What about multifamily? These are apartments or other larger units, and these are usually characterized by a larger development coming in and permitted, et cetera. So they're kind of like random. So this is typical, in most communities. So you get fluctuations based on what comes down in terms of larger apartments being proposed. I would imagine some of them, we haven't done research yet. Some of them might be income restricted apartments. We don't know of too many larger scale apartment complexes that have come along recently, or there might be a few, but it's been just kind of like, kind of unpredictable in terms of production. Okay, that's supply. That is a snapshot of where you've been and what the housing market is. Now we get into a market analysis. This is where Chris and I and the team look deeply into the housing market performance. So how much are homes selling for? How much are homes renting for? What's the vacancy rate, etc. First, I will do the sales housing, and then Chris will come back, take the time and do the rental housing and take us all after that. So, all right, sales housing. The pace of sales, a very important indicator in terms of how robust the housing market is. Since 2019, in 2019, there were 539 sales. In 2020, when we didn't know what was going to happen, with the pandemic, et cetera, we went up to 591. And then things got a little crazy here and all over the country. In 21, it jumped to 750. People were refinancing and buying homes with a cheap interest rate, historically low, in fact. So 21, and then it went even higher, 783 in 22. And then it cooled quite a bit since then. And then we don't have a thing here, but we have a chart of interest rates, and that's when the Fed sort of breaks off interest rate. A lot of it slowed down to 626 units. So the important indicator here is that the 626 is still higher than pre-pandemic levels. So your housing market is still more active than the stable market, if you will, in 2019. Now, what about prices? 2019, your median sale price was 115,000. Obviously, there's a lot more expensive homes and a lot more affordable homes than that, but the median was 115, and then it started going up. 157,000 was 22, and if you remember the previous slide, it kind of slowed down. The expectation from economists was that as the interest rate slows down, the supply slows down, etc., the price will be moderated. But we have yet to see that anywhere in America, and this was not an exception, that prices have not gone down yet. So you're still at 158,000, which is 37.4% higher than 2019. So annual increase of 8.3%. Okay, so this just gives you a distribution. So, as you can see, the median point will be somewhere in the 158,000 point. Next, this is one of the takeaways in our observation is the age of housing structures built has correlation with how expensive it is and how big the property is. And this is one of the reasons we think is for the price escalation is that the homes that are being built recently, especially built after 2010 in this graph, are significantly bigger in size than the more modest homes in the earlier decades. So 1940s, your homes were about 1,500 units, and then you pretty much kind of stayed at that size, and then it started going up since 1990, and then 2010, about 1,900 square feet. So that's still, national standards, that's still pretty small. We've seen this number in other communities reach 3,000 square foot, like medium size. These are pretty large homes, but these are still pretty modest. Nonetheless, because they're bigger, you have to charge more. So it's a chicken and the egg. Is the market for bigger homes that developers are responding to? Probably true. Are there things that you can do, probably right size? Is the market trending that way or the other way around? What about the shift in demographics, more seniors, more young people? Do they need a 3,000 square foot home? Not sure, but developers are building nothing but it appears larger homes. So therefore, they're going to be more expensive. All right, next slide, this slide talks about the variations between the submarkets. The city of Batavia, the median sale price during the 5-year study period of I should have mentioned there's 3,250 sales every city. Was coming in at 120,000. The most expensive was in the town of Batavia, just under 180,000. And then the east west, 150, 160. This is for the entire 5-year period. But if you look at it by year, you can see yellow is Batavia City. It was below 100,000, and now it's up to about 134-ish. That's a 40% increase. The east and west, they've increased about 34%. The town of Batavia has always maintained the most expensive housing stock in terms of sale prices. So it started in 2019 at about 156-ish. And then in 2021, I believe that spike is corollary to the one development that had a pretty good sale price that had a real spike in character, and then it kind of modulated and then ended up at a little less than 200,000. I believe it looks like 25% increase over the life of the study period. So that gives you an idea for the 4 submarkets. Now to rental.
So rental market, similar to the sales, we looked at it by submarket. So not surprisingly, and I think as we mentioned, Batavia has the most rental units in the county. So this is from the census. Actually, we wanted to say to get a sense of how many units are there overall. So about 6,300 rental units in the county. The city at 2,800 of them. The town of Batavia is the fewest. Because it is just one town, and then when you look at the east and west, multiple towns, you've got more like 1,600, 1,200, 500 units. So again, that's just giving you a sense of the distribution. We also looked at your multi-family complexes, the larger apartment complexes. There's not a lot, relatively speaking, in Genesee County compared to a lot of places. The city has the most of them. Total of 619 units in apartment complexes. And then the west submarket has just the new one, I'm forgetting the name already, Frick House, yes, thank you. And of course that's to expand to more units, but there are relatively few complexes in the county. Most of your units are, I think the next slide. No, that's right. Most of your units are in single detached homes, duplexes, triplexes, that kind of thing, not your 150 unit apartment building with the pool and the dog washing station, that kind of thing. You see a lot of that in the Rochester suburbs, the Buffalo suburbs, but very little of that here. In terms of rents, we took a look at everything available right now. This includes your complexes and just available apartments in either as an entire house, a duplex type of thing, your entire stock. The top number is the upper rent we found, and then the number in white there is the lower end. So in the city, you can see a new I'm sorry, we looked at one bedrooms to kind of to compare across the board. So in the city of Batavia, you can get a one bedroom apartment for $13.25. Now in the town, we could not find anything that we thought would be the upper limit of that, although we did find one for $5.95, so that would be considered the lower. When you look at the east submarket, $1,300 for a one bedroom apartment unit, and then in the west, $1,200, and we did not see anything kind of on the lower end. So it's a little bit of a apples and oranges in terms of what was available, but I think it does give a sense of generally what are the lower one bedroom apartments going for, and generally what are the upper going for, and fairly consistent, except the one in the town. Interesting. And then when you look at the distribution of rent county by submarket, not surprisingly, the 700 to 1,000 and 1,000 to 1,500 are the most common rents you find. There are some less than that, a few more than that, but that's the middle. That's pretty much the common rent you'll pay.
What is no cash rent?
Yeah, that's a census term again.
Yeah.
That is.
That could be folks that are using housing vouchers.
Okay.
Or income restricted, and they have almost virtually no income. So they do have that. Exactly who they are, it's impossible for us to say through the census data. Unless we really dig it.
Yeah.
Or just renting from someone, but you're not paying anything. That's a great deal.
Like families, you could be with a family.
Possibly, yeah.
Or maybe it's some of you like cook and clean for your, there's some arrangements like that. Do some jobs around.
He's very right.
Okay, so that's a lot of data. Again, the report, it's much more in depth than that, but we wanted to just list out some things that jump out from that analysis. And this is just from that research. In a second, we'll get into what we've heard from you all talking to you, the stakeholders. And you'll see that I think a lot of and the survey, a lot of it matches up pretty well. So, so in a nutshell, the county is overall declining, but some areas are increasing in population. We did notice the senior population is increasing, and we're seeing that all across the boards, everywhere we work. The baby boomer large generation, as that ages, we're going to have a large percentage of the population that will be looking for housing that's fairly specific to their needs. So that's something to keep in mind. We talked about the housing cost burden. Particularly renters are struggling more with rent than owners. The manufacturing healthcare jobs have grown, which is great. The city and town have both increased in owner occupancy. The city has also increased in renter occupancy, but the town has decreased in renter occupancy. So again, Batavia is like the shining star of activity right now. As you mentioned, the newer built homes we think are lending to the expense factor. The median sales price, I think we said 138 was 158 was the most recent. That is significantly lower than the rest of the country. The rest of the country is in the 400,000. So that's an issue in terms of just being able to produce more housing. If developers can make a lot more in other places in Genesee County, we got to figure out how to incentivize that. We discussed how, or maybe we didn't discuss, but vacancy rates are very, very low. I think Isaac mentioned 5% is a comfortable vacancy rate for apartments to kind of turn over to other tenants. I think the one we had the most information on was Batavia. I think it was less than 1%. I mean, there's barely anything available, as any of you looking for an apartment can attest to. And I mentioned the highest rents are in the city, and there's a lot of new activity in the city as well. Some of the downtown new market rate units going above stores and shops on Main Street. So that's very exciting. There's a lot of activity happening there, which is great. Okay, so we'd like to just share with you some of the feedback we've heard from the people we've spoken with. We spoke to about 30 people since we started this process, which we think is a really good number. This wheel of people gives you a sense of the types of folks we've spoken with, kind of all across the boards. All those folks really have some sort of connection with the housing market, so they all have very interesting things to say from their perspective. So a lot of good feedback. So these next two slides kind of capture 10 themes we thought rose to the surface from talking to folks. I think it'll probably relate to a lot of these. So lack of rental housing, as I mentioned. So we've seen that through the data, and we've heard that now from stakeholders, whether they be landlords or realtors. It's really hard to find. Affordability, we're not surprised, high rents, people can't afford mortgages, people can't afford down payments. And it's really affecting middle income. A lot of people think affordability is strictly for lower income people, but hardworking folks making a decent income are struggling as well. So that's really telling of the market. There are ownership barriers. I alluded to the down payment issue. Even if folks can afford a mortgage, if it's maybe similar to rent they're paying, the problem is scraping to get all that down payment. And that's often a barrier for people to go over to that next level, and they can't do it unless they have family that can help or something. That's a real barrier. Senior housing shortages, I mentioned the growing cohort of seniors, but there's not enough housing to support their needs. And that's often single story, barrier free in terms of accessibility, low maintenance, common maintenance, shoveling, mowing, all that being taken care of. And there's not a lot of that in Genesee County. We're finding nationally there's a shortage of that as well. Rural housing challenges. There's outside Batavia, that's fairly rural. We heard a lot about transportation. I think you assume everyone has a car and everyone doesn't. So from employer's standpoint, it's hard to people are or they're sharing a car in their household, and we've heard that it's difficult for some people to get to work or to get to the hospital or that kind of thing. So transportation is an issue. Then the remaining five, the maintenance issue. I'm sure you're not surprised that the county's got a lot of older houses, particularly in villages. A lot of it needs maintenance. Maintenance is expensive. A lot of the homes are large, so to keep these homes occupiable and viable member of the housing stock, if you will, maintenance is going to have to occur. Regulatory and community barriers. So in places where people do want to build more of a variety of homes, whether they're affordable or mixed income or multifamily, any of those other than single family. Sometimes there's resistance to that, whether it's just people not wanting that or the zoning not allowing it. So either way, some of those barriers will have to be overcome for that type of house to be built. We heard that developers would like to kind of be more involved, I guess, just understanding what the market is, and this process and this study will help in that regard. Maybe this can lead to more developer forums or something like that to kind of keep everybody appraised of the market and the needs and challenges. The employment impact, I mentioned that, but businesses sometimes forget that the housing is a big part of employers finding quality employees on both ends of the pay scale, executives down to lower income workers all across the board. Housing is a challenge. And then vulnerable residents, transitional housing for the disabled population, those returning from incarceration. There's, again, we see this in most places we work, there's just not a lot of options and, there's a lot of struggling involved with, how to house people, in a transitional situation. So we thought those really captured well what we heard from folks we spoke with. Okay, so the next section goes into the survey. Should we maybe field questions or do we want to get into the survey results? What do people, does anyone have any question that's jumping out right now that we'd be happy to answer about all the stuff?
One question I have
Yeah.
is a lot of the data that you're showing, it was 2022, but we're in 2023.
You know,
And there has been some big changes the last couple of years, so how is that going?
yeah, well, the 2022 stuff that's all the census stuff. So fortunately, all the really detailed housing market stuff, that's, no, the really detailed stuff, like the median sales price and all that, that's current, that's up till December of 2023, yeah, so it's kind of a mix.
About the rentals.
The rents themselves are current, but that one where I showed the number of units, that was from the census, just because they got a good tally of what's going on, so yeah, it's a little bit of, we use what we can get from the census, understanding it's very limited. That's why we wanted to perform some of these other data dives into the actual market, knowing that that stuff's much more current. Yeah.
In one of your comparisons, you talked about the one bedroom apartments.
Yeah.
You didn't look at 2 and 3 bedroom
No,
apartments?
we did, but just for that slide, so the report will show you all those.
Okay, because I was thinking that in the town, you're gonna see a bigger number of that than
Yes,
what you're seeing in other areas.
yeah, and the reason we picked the one is I think, for example, some of the submarkets didn't really have any reliable info on like a 3-bedroom, so we would have had like some blanks. Whereas the one, they all had one, so we just kind of chose that as a comparison. Yeah, the report gets more into the details of all the apartments we could find, all and the rents, so, yeah.
I had a question.
Yeah.
On the employment trends with the driving to and from Monroe and Erie County, did that come from the survey results or is that research people?
That was research, yeah, yeah.
That data is from the Census Bureau. It tracks employment through the unemployment compensation numbers. So it's actually the most accurate commuting and employment information that we can find. So it's up to date up to 22, I think now. So it's pretty good information to dive into.
Yeah, it is unfortunate with some of this, it's just, there's a limit to there's always a lag. With the census, it used to be just every 10 years, as you recall, and then they started doing the American Community Survey, which is a yearly estimate based on the past 5 years. So the problem with that is it's a sample, so you get something renewed every single year, but there's a margin of error also. So as anyone who deals with the census knows, it's a good guide, but you can't take it for what it's worth 100% of the time. So, but we do think that the more detailed housing market research will compensate for any of the questions of the census. Yeah.
Except the jobs number, that's actually very good. But population households was very sketchy.
I guess just, kind of open-ended, but was there anything unique that you saw in Genesee that was surprising or out of the norm for, a community like ours? I don't fall for roster, different types of counties.
Yeah, not really. I was surprised at your low apartment supply, to be honest. Like, I think there's a huge market to keep building more market rate stuff. And the new stuff downtown is getting snapped up. There's just not a lot of product like that. So I think, for those who are commuting out that work here and leaving, they may stay, if they've got something that they can't find. So that was something that stood out with me.
Yeah, so one thing that, this is a smaller comment, but the manufacturing jobs are growing, the jobs that are located here, but it seems like they're attracting people that are not Genesee County residents. There are more people that are commuting into those manufacturing jobs than before. So your number of people that are working in manufacturing that are also your residents, I think that number is slowing down. It's going downward.
I think in our experience, I don't know, Graham's kind of the outlier in the center of the county. A lot of the manufacturing job growth is, those locations either some are really concentrated in the town of Batavia, but a lot of that is, like Pembroke, Virgin, which are right on a transportation corridor and immediately adjacent to one of those, like somebody coming into work in Virgin. Churchville is closer than, say, Batavia.
Right, yeah.
Yeah, but I think too, you see some of these guys at HP, some of these companies, most of their leaders don't even live in the state. They travel to Tennessee, West Virginia, and Texas on the weekend. So you get a lot of that too. I don't know how much they capture, but there is a lot of that.
We also get a lot of anecdotal information about, like a couple will choose to live in Batavia.
Yes.
One will live in Rochester.
Yeah.
One works in Rochester, one works.
Right, okay. Yeah, no, that's good for that, yeah.
So one other point to address your topic about uniqueness. The fact that we talked about it, the fact that the sale price, the market is below 200. There's no way for a builder to build new and recoup the investment. So the only way you can do that is to build homes, like we see in the new development that are selling for like upper 3s or 400s. And the population that can afford that is very small. So what's the policy here? It both supply end and the demand end is probably the right answer. So you need to increase the demand of people who are willing to work here and purchase homes at that price, but also create incentives or some kind of development incentive or something so that that price can lower and reach more people that can, dip down to mid 3s maybe or lower 3s. Then when you're talking about more of a workforce housing product. So you have a dilemma here because you want to build, but you can't. Because of the sale price, and there you're just kind of compressing the housing market more and more, and everybody's suffering as a result of that.
Doesn't that just tell you more that they gotta build more units?
Yeah.
You can't just build 2, you need to build 50.
That's right.
Build 100.
And does the zoning allow for that? I think that's maybe not. So we'll have to think about those things in the next phase for us.
Yeah, and I think, the more multifamily can definitely help, because not everyone's looking to buy a house, despite the median sales price.
Well, and you guys brought up too, there's no condos,
Yeah,
which is a unique thing.
great, and not a lot of townhouses, that's often an affordable product in a lot of, even like Ontario County, like Victor, Farmington, some of the newer complexes are townhouses are all attached. And in areas that don't see a lot of that, that's kind of a foreign thing, if you're like, oh god, I gotta share a wall with somebody, but a lot of places are embracing that because it's much more attainable for a lot of income levels. So it's a great product for kind of the workforce. All right, well, if you think of any more, don't be afraid. But we'll go through the survey results. I think a lot of people find this interesting, especially if you filled it out. So okay, so we started with just overall results, and we kind of parsed it out into renters, homeowners, and so on. But overall, pretty good distribution of age. The younger people tend to not want to do surveys. Gender, mostly female, and we find that a lot. Women like surveys, I guess. I would like surveys.
It's all the guys.
Yeah, it's interesting. We have who's employed, who's retired, most full-time employed, good chunk, 30% retired. And then you can see some folks had 2 jobs or college or, interesting breakdown there.
Now, that's interesting that retired is 30 for the town and 58 for full-time employed. I would have thought that's first. You know what I mean?
Having more time,
Well, it just seems like, I don't know,
Given our population.
yeah, the population.
Yeah. Oh, by the way, we're at 540 responses, which we thought was great.
It
And
depends on the service.
5% don't live in that county, so they got it through their employers, but that's okay. And then looking at the owner versus renter, 80% own. So we got a pretty, it's not a full spectrum random step. So you can see that, mostly full-time, mostly own, but knowing that it's interesting nonetheless. Diving a little deeper, we wanted to see how long you lived in your house. 37% more than 20 years, very interesting. And if you are looking to move, we were particularly interested in folks living in their home less than 5 years, because if you're looking to move and you've only lived in your house for 5 years, there's gotta be a reason that you're looking to move, obviously, but top one was change in employment, so.
Those are people that moved into the county that lived less than 5 years.
That's right, moving into Genesee, yeah. So you can see there, it's a different school district, closer to work, employment was definitely part of it. They decided to purchase a home for renting, so interesting reasons for moving.
Number 5 is interesting because we spoke about the low sale price. That could be an advantage to attract people who are priced out of other regions.
That's right.
You could buy a home here. It could be a proposition.
Right, if you can find one.
If you can find one.
That's the problem, right? Yeah. Still, this is all 540 here. Just to get a sense of annual income, again, pretty widely distributed. Both living here more than 5 years and less than 5 years. And you can see the ones who've lived here longer left earn a little bit more. So there's 60% earn more than 75,000 versus 46%. And then those on a lower level, there are fewer among owners. Among people who lived here more than 5 years than people who lived here less than 5 years. So it basically means the transitional less than 5 years, if you want to call it, are not quite as wealthy as those that have lived here a long time. So that's
In your survey, you didn't ask the people who were moving back and forth, if some of them were moving for quality of life. Because some people come out of Rochester and Buffalo because it's safer out here. And
yeah, I think this question did ask, yes, so we asked them why'd you move here? Yeah,
and where's that stack up in that lineup?
what was the ones that?
The ones that came here because you.
Oh. It was probably below 5 and maybe, yeah, could have been top 10, I'd have to look that up, but it was not the top, those are the top 5 that we added up, yeah. Okay, so switching now to homeowners, so those who currently own a home. We want to know, where do you live in now? 95% live in a single detached home, so that fits with the research we got from some of those pie charts you saw earlier. 2% in a manufactured home, mobile, like you said, only 1% in a condo, 1% senior living, and 1% town. So overwhelming majority of your housing stock, at least among those who fill out the survey. How long have you lived here? Look at that, 44% live there more than 20 years, so lots of long-term residents, which is great. And you can see the breakdown is pretty evenly split through 3, 10 to 15, 20, 10 to 15% there. So the big takeaway there is the more than 20%. I'm sorry, more than 20. Getting a sense of what people pay. So this is for homeowners, this is their mortgage. You can see 33% don't have a mortgage. So that would be assuming that they paid it off, so they own their home. And you can see that little asterisk there, 70% of those folks live there for more than 20 years. So that's clearly they paid off their mortgage. So for those folks, they're great. No mortgage. Then you can see the breakdown around the rest of the pie chart. So only 7% pay less than $500 a month. That's pretty good for a mortgage. And then 1% approaching 3,000 a month on the higher end of the scale. So interesting distribution there, but 13% for both 800 to 1,000. That's your two larger chunks, other than the own the house file. Switching to renters then real quick. What's your rent? You can see 27% pay 800 to 1,000. So not far below that in terms of percentages, 600 to 800. So between those two, a little more than 50% pay between 600 and 1,000 a month, that's what I would expect based on the rents we found and the availability of most. But you're gonna have your folks paying more, 70% pay more, and it's paying less. And so it's always interesting to ask renters, are you planning to purchase a home? Because we wanna know, are they gonna be looking to buy something and does the county offer that, what they're looking to buy? So 12% said no, I'm gonna stay a renter, which is great. The rest said yes, but then we kind of broke that out to see what they are planning to do. So 26% are looking for something right now. So that's a challenge because it's a challenging market in many ways to be purchasing a home. And then another 62% want to move, let's say within the next 5 years. So they're thinking about it, maybe waiting for interest rates to go down, maybe waiting for prices to stabilize, supply to improve. You know, that's 3 major factors right there that's making the purchasing market challenge. So yeah, so it's very interesting. And the asterisk there, so 45% of the renters in the survey said they're looking to move in the next 5 years. So that's kind of interesting. So asking, okay, so what do you want to buy of those folks looking to purchase in the next 5 years or immediately? 90%, not surprisingly, want a single attached. 5% a manufactured house, and 5% said condominium. So I assume by that they meant something they could own, but maybe have less maintenance. That's usually what that indicates. So maybe an association that shovels and mows and that. And then this is interesting too. So if you were to buy a home, what would you be willing to pay? We always like to ask that to see where it matches up with what's on the market currently. So that bullseye kind of indicates that it's pretty much in line with what the market is showing us. So most people will pay 150 to 200,000. Some will pay upwards of 300,000 or more, but the majority fall in that range where the median sale price for 2023 is about 170.
So of the renters, you're talking about only 7% that can afford homes that are being built by the builder community. So that's the slice that we're talking about.
Okay, so this I think goes back to everybody. Are you planning to purchase home in Genesee County? No, 28%. Yes, and maybe kind of an even distribution. But this is an important question. What are you struggling with if you want to buy a house? Cost, top of line. Lack of suitable homes. Now that's often number of bedrooms or bathrooms that people have a set number in mind for their family needs. And if that is not available, that's probably where they indicated a lack of that. You know, some folks need to move in right away, they don't have time to renovate. Any of that, 14% said that, 6% the down payment issue. Attractive competitive areas. I think what we mean by that is there's other places that they could commute from that was maybe more appealing to them for maybe school district, amenities, that kind of thing. Another 4% have moved because they're too far from work, they need to be closer. And then access to transportation. So that kind of goes with some of the things we're hearing from stakeholders. Okay, just focusing on seniors for a few minutes here. We asked, you're 65 or older, what's your preferred housing arrangement? 61% would like to stay put. 20% want a little less space, they want less maintenance. 14 retirement community, then you got relatives, I'm not sure what other. But interestingly, of the people who want to stay in place, so that's 61%, 43% said that their home was not suitable right now to do that. And they would have to make some modifications to it. So there's the desire to stay, but the ability for that to occur right now is not, we're not quite there. So some intervention will be needed for that to occur. Diving into that a little further, is your current home suitable for your needs related to aging? So 37% said yes. Okay, that's fantastic. 32% said no. And then, yes, but requires substantial modification, so whether that could be.
Something,
Right. Yeah, whether it's a, grab bar, and some of it's pretty minor, we're not talking an elevator necessarily, but to be comfortable, something's gonna have to happen to make it worse. So this is kind of interesting feedback here. This gets into, some of the issues we talked about with insecurity and cost burden, that kind of thing. So we asked folks, have you experienced any difficulty paying for basically your other daily needs besides housing because of the cost of housing? Across the boards, everybody, 39% said yes, they had to sacrifice maybe, medical needs or childcare or something, or delay going back to get a degree because of housing being too expensive. And we'll break that into homeowners and renters. Not surprisingly, again, homeowners not struggling as much, indicating that they have not had those difficulties in a higher percentage than renters. So again, pointing to renters struggling more with the cost of housing than homeowners. And then asking, have you further the cost burden issue? Have you had to live with anybody because you needed shelter? You didn't have a place to stay in a home right then. No, not many homeowners have had to do that, but among renters, almost 20% have indicated, yeah, I've had to stay with other people in the last 5 years. I think that's true. That's true, sorry. Yeah. Okay, almost done here. We asked a question, we asked folks to rate each of these household types by low, medium, and high in your mind. What's the priority? So we took all the votes for high priority here and summarized it. So basically what this is telling you is folks who filled out the survey think the highest folks we need to kind of pay attention to and address their needs are families with kids, seniors, veterans, and not as much middle income folks, homeless and low income folks with disabilities. And you can see college students and people with a lot of money are not considered that important in terms of housing, which makes sense.
Well, you said seniors were moving, that we have more seniors, so that's, that's where our issue is. It's been like this forever.
Yeah.
It's really, we still haven't addressed it, and here we are 10 or 15 years later, we're still in the same place.
Yeah. And then you probably can't read this, but this may be more valuable once you get a copy of this presentation, but it just summarizes the last question we asked, can the state or the county, how can government help the housing market or your situation? And these are we combine all the responses and the ones that rose to the surface, top 10, and very similar to what the stakeholder said, to be honest. Affordability, variety of housing, employment, transportation, workforce housing, not enough apartments, multifamily housing, middle income folks can't afford housing. Property taxes, a lot of folks said, gosh, we could just lower that. That's all, right? That would make a big difference toward being able to afford housing. So I think the good thing here is that we're getting a lot of themes common among folks filling out the surveys, people we've been talking to, and then the data we've been collecting. It's pointing to a lot of the same issues, which I think is reassuring versus having things all over the place. And where do we start? So I think that is it for the survey results. And that is for the presentation. So happy to field any questions about the survey, about anything we're talking about today, any housing related things on your mind.
I want to make sure anybody on Zoom.
Oh, yes.
So it's
Absolutely.
if you have, if you're on Zoom, and you'd like to ask a question, fire away. You do yourself first.
So what are the next steps?
Very good question. So we will go back and our next big step is determining the housing needs. So based on the trends we're seeing and future trends, you know, based on what the sources are saying your population growth will be, your employment growth will be, we will determine the number of housing units we think you need. And we further define the type of housing, whether it's geared towards seniors, whether it's geared toward younger individuals. So we'll come up with a number and a pace that we think the county will need to supply that housing. And it's not necessarily random construction across the boards. I think you know, a lot of your existing housing, to the degree that it can be maintained and improved, and some of the vacant stuff can be reoccupied. It's a combination of just adding more units, combining new and existing. So we'll be doing that in the next couple months, and then we come back in September probably to present that and wrap up the whole process.
Some high level recommendations.
Yes, sorry. We will, yes, some strategies and recommendations based on this. Yep.
Else? Well, thank you very much. Really appreciate
Yeah,
it.
and feel free to follow up.
This recording will be made available to everyone. I will also send and post on the website copies of the slides.
Great.
For everyone to share.
Yeah.
Any questions you have that you think of when you get home,
Yeah.
feel free to email us and we'll get those as well. Or if anybody watches the recording right now, you're watching in the future. Send us an email and we'll be glad to answer.
Yeah, that's nice.
Okay.